Hello, everybody, and welcome to the Plus Three Futures and Commodities Show, the holiday edition. We are recording here at noon Eastern Time on July 5th, the day after the 4th of July. Happy birthday, America. And my name's Ben Maldonado, and as always, I'm here with my partner, Barry Hederachi. Barry, how you doing? How was your 4th?
Fourth was great, which means I'm a little bit slow this morning, but we'll try to make it. We'll try to make it through. I'm
Well,
still
the
seeing
the
fireworks on the screen, so
there you go. There you
mhm,
go. So that means you had a good time. So look, the
yeah,
the we're going to do a little bit different show. Number one, because it's a holiday, but also because next week is a huge cycle window. I mean, we've got timing counts, we got Rebel Yell hits, we got the lightning cycle all
yeah. We
coming
got
together.
squares.
We
Hmm.
have square. So a lot of stuff is sort of firing off if we use the fireworks analogy. It's like a grand finale type of thing. So it's really important this coming week. We watch price action, we know the levels, we know the timing, and so on this show we're going to focus in on a couple markets. We'll talk about some other things, but it's going to be a short show. It just know that the reason why is because we really want to hone in on a couple markets during this cycle window. So without any delay, Barry, let's jump in on it. I see the S&P getting pulled right up into price and time, it looks like to me.
Yeah, we talked about this 180-degree move up, level up here at 62.80. It's been on the board. I know it was there last week, and ever since we got through the 144, obviously the next big target is 180, and we were looking at that, watching it, and we were also looking at timing. And you're not kidding about timing because we have in degrees we have 80, 90, 89, 90 degrees coming up next week, 6th, 7th, and that's in the middle of everything else that you mentioned. For me, this setup is enough to be a little bit be on alert and watch your sentiment because you know how we get all pulled into being bullied up when the market's just going straight up, and and it's great, from the 144 level, all the way to 180. Great, great. We bullied up and we traded all that. If you guys are following us on X, we were just on the long side the whole time.
Hey Barry, look real quick. Look at the 144, the bar, the last bar at 144. And you talked about this a
Ah,
lot of
right.
times to get over those key levels, it has to gap. And look at there's your gap.
Exactly. And
Gap
and
and go.
especially because we had some squaring out here, that happened. And we also, or somewhere in here, right? And we talked about
Mhm.
how once, you know, price and time squares, well, we had the 72, 144 by 72. We had some other 90s too, I think. And once we have that, if we take that square out, then, we have a long ways to go. Long ways meaning basically the next square resistance level. And in this case, 180. So we got here and we're going to be here in time by the time, Monday, Tuesday. So we're in the window as far as time goes. So that's sort of our key to kind of pause and not be buying with both hands. At the minimum, it's a time to pause and see if we can get above 62.80 and settle above it, just like we talked about all the other times. How we stalled out here um, when we got to the first 50% square and we could pause. We got to wait till it gets above. Sure enough, we gap, pull back, it's still above, and then we started running up. So it's and 50% square here. See, we went to the square, came back to 50, ran back up. And here we had a big up day, came back. So the idea is the same. Now we're at another key level, and we had a couple of weeks of a good run, and it's so that's the idea. Are we gonna turn around and go bear market? Well, I don't think it really matters because, well, it matters if you're a long-term investor, but we're trading, we're focused is week to week, and we post daily updates, 30-minute charts. So we're, focused a little bit more short term. So it's a little bit easier to work with whatever price action that comes. So here we have the potential to turn. So let's take a look at that. When you get a 180 in price and 90 in time, that it's like a 90 by 90, but double. Um, so this is one of the most important squares, and we have that. And because of that, we have to be cautious. And if it really kicks in, and we'll look at more when we look at the weekly, once it kicks in, we can figure out what happens, especially if we, wait for the lower high or some kind of a false break up here. We can map it out once that happens. And you guys know that's how we work because we really want the actual footprints of the price action to figure out how it matches with the cycle and the squares, which keeps us trading for all these years because this forecasting is great if you're not trading your forecast. So I think it's
Because
good to.
Barry, to the
Mhm.
point you're making, isn't it possible that the other alternative is we accelerate out of here, like
Absolutely.
continue accelerate higher?
Hmm. Absolutely. Because exactly like we happened, and we just talked about that, right? I'm glad you brought that up. So 144, I talked about, we had a square here, we took it out. If a square gets taken out, then we can go move higher. So in this case, obviously, if we take this out, we settle on top of 6280. That opens up a whole nother layer. So easily 6500 is possible. But I know 6400 was a big number that we looked at last week or the week before. So, and anyway, we'll look at all that, all the possibilities of the upside and the downside, and we'll move on. I just wanted to give you guys this because this is our starting screen. I want to make sure you guys get familiar with where we are. And here's another shot of the SPX cash chart. Here's a 180-degree move, a little bit cleaner. You can see a little bit cleaner there. This is the calendar day chart, another degree solar chart, solar degrees like I showed you guys in the cash that we first looked at. This is futures continuation chart of the futures calendar day. And you can see we're up, it's a 60-degree square. We're up 180 degrees and 90 in time. And that would just roll right up on Monday. So we're in the time zone, right? Even solar degree wise, it's a couple of days off. If you just take calendar days, we're right there. So it's lined up. The reason I run a futures chart and also the front month separately is to make sure we don't have any issues with price levels because the premium that's built into the older contracts and whatnot. So here we're a little bit above 180, but I wanted to show you guys the timing and that basically we're there. Now to look at the actual front month, and that's why I run this, you can see we're below 180 and the level is 63.35 and we're basically 90 calendar days, 90 degrees in time. So this is a big square. Let's see what happens. We talked about the level. We talked about what has to happen in order for it to move higher. Means we have to settle above this square. So it'll settle above 63.35. Actually 63.28. Let me edit that from the other contract. Yeah, 63.28. And not too far from the 64 number that we talked about. 64 is right there. So you can almost say it's another.
It's probably the eighth, right?
Well, it's the sixth. Yeah, it's the eighth exactly, right around the
Hmm.
eighth,
Hmm.
which would make sense, right, from that perspective. Yeah. So that's it. If we clear the square because of the weight of the square, then and we settle on top, then I think obviously we're gonna go. We have definitely um, room to go higher. If we turn here, at a minimum, we should get a decent correction. And if the market is, we were talking about the gold market, if it's behaving normally, we can pull back all the way up to 60.83 for starters. And if we hold above, I would say the quarter square around 6,200, then we have the potential of challenging the highs again. And that would leave us with what? If we come in here and look for a lower high or a false break, we have to look for those two because of the square that we had, right? So that's just a given. And the bullish mode comes in if we can settle above. So that's how I would sort of mark that up step by step. And then no matter what happens, you know which side to trade and take the setups in that direction and you know where the pressure is, right? So if we can't settle above this, then the pressure is to the downside. Anything to add, Ben?
It is good from like 63.28 to 6,400. If we can't clear
Even
that,
even on the upside?
yeah, no, if we can't clear that, then that's That's a sign that, okay, these cycles are marking a top and now we have to see what comes next after it.
Yeah, and not to make light of, I mean, I know we don't get to talk about these big squares that often, and I'm not trying to, harp on it, but basically we really need to be aware of these big ones, especially when they line up with other markers that we use for cycle terminations, right? Like you just mentioned at the opening. So we have a bunch of them lined up, grouped up next week. And when it's like that, we really want to pay attention because the moves are going to be volatile, right? And yeah, so that's that.
Big.
Big, yeah. Here's another, it's just another view. We're 180 degrees up again, and you can see the distance that we did before we moved up. Remember the 59.90 that I had marked up, and then we had the 50% of the square um, coming up, and we held there on that reversal day before we broke out of the 144. Remember that? Because this is the 135. And that's from there we made a clear shot right to the 180 and we stalled out, right? So that's
Fantastic chart.
yeah, it's funny. You can look at the same chart with different squares and different lenses and it becomes very clear what that is. And let's take a look at this weekly chart that we've been watching. Now the weekly chart, we might be switching. I mean, this is a 60-degree chart that 60-degree square that I've been using, and it might be time to switch to actual weekly. If I do a 52 square 52 chart, we have 63.76 as the next major square, weekly square. And that is right at that 64 level that we talked about. So you can see on the square of 52, it lines up pretty well. And the square 52 has been pretty good overall, in 21, was it 21, 2021? That December highs that came in January, just December highs. We were at, we're three squares up, we we're at 156. You can see that turned the market down for a while. We went down 1.5 squares and then back up. Here's a good case of where we break above and hold above. This is what I mean. Once it does that, then we can trade the long side here. You can see it came back to the 50%. So the square is good. It's been working. So here's another point to mark down, right? So 63, 82, 83, level 387. You type that in. So that's also lining up. And that just adds, right? That means we are hitting some major weekly resistance coming off the 2020 low, which is sort of the big low that I've been using to measure this. And maybe then one of these days we can do one of your monthly rounds and see where the monthly squares are coming from. Or I can
Sure,
do it next week.
we could do it next week. Yeah,
Yeah. Mm-hmm.
not a problem.
Yep. So anyway, so that's that. We need to note that. And here's a normal, I think this is a normal weekly S&P cash chart that I've been using. Remember the ABCD target came back down to this 48.72, 48.21. That was a zone we were looking for support. And it stopped, pretty much in there. And now we just bounced right back up to 90 degrees from there. So again, we're at that level, and I know this line is not just a line that just dropped. I just drew. It's a geometric line. So we've seen this before a couple times, right, Ben? When we're looking at these highs coming in, we look for these lines, price to come up and hit it from below before it terminates. In this case, it's interesting. We have a 90 and the line happens to be exactly there where it intersects and we're coming up right into it. That's another
That's a
point.
great line. That's a great
Yeah.
use of that line.
Yeah. It's, the line looks great. So let's see. I mean, like Ben mentioned earlier, if we can if we can settle above this level, well, that opens up a hell of a lot, and long as it doesn't, we have a lot of other possibilities, to the downside and we can look at the depth of that and all that later, but that's the idea. And well, that's it for the weeklies, and I think that covered it pretty well. And as we do every week, let's take a look at our 30-minute chart that we post every day, every morning. Hopefully, sometimes, often before the open, sometimes at the open. And here you can see, well, 62.50. I think we talked about it last week. I can't quite remember, but I mean, that was the price level we were straddling. We found lows at 62.26. That was the level we talked about. If we can hold above that, we're going to challenge 62.50. And if we can obviously settle above 62.50, we were going to go higher, right? And then above 62.70, which was also resistance. And you can see we tapped here, came back. And once we settled above, which was settling above is right there, right? We move up, come back for a retest, and it held above the breakout point. So that's always always a marker, right? We're looking for. We want to see it holding above. And once it did that, high or low, and we ran up to the highs. I thought we'd get to 63.41, but that's the next 50% level. I mean, it tried really hard, but then right at the top, we had a fuse line, and that was pretty much it. Going into next week, let's see how it all works out, but it's definitely a yellow flag, and taking out 62.50 is definitely a red flag for next week. Why? Because of the cycles that we're working with. Now, if we hold 62.50 somehow and bounce, we have to watch to see if we get some kind of inside day price action, and then, we'll have to follow through on the coming days. But basically, we're looking at the 62.50 level for some kind of reversal and getting stuck, right? So if we break below this area and we try to come back above 62.70, we can't, we get stuck below like we did here. Those are signs that the market is weaker. Obviously, if we come down to test this level and we make it through and we hold above 62.70, there's more to go. At least a consolidation or distribution, however you want to call it. If it's going lower, distribution, right? Whatever it is, it'll be higher. It'll be holding here, but I think the directionality is in question at that point. So because we can go up and hit the 63.41 before it's all said and done. Remember, we have to actually pretty much till Thursday, if you give it a plus or minus 1 day or 2 day from different timing points, so Wednesday. So it's possible that we go up and tap 63.41. I mean, who knows, right? These days, maybe even the 64 number before we reverse. But the key area, I mean, the big point here is that 62.50, 62.70 is going to be the marker, the balance point. That's a good way to think of it. As long as we're above it, we can do more upside things. And if we don't take out the high, then higher probability we're going to roll over, right? And if we get below that and get stuck, let's say stuck even below 63, can't get above 270. This area is basically it. I want to watch. Are we below that, bumping up against it, or are we above it, bouncing along? Because then we can just go bounce, and then bounce. Anything you want to talk about after this, Ben? About the 30-minute?
It's a good short-term number, right? Because if you could see that, especially 62.50, we spent a considerable amount of time there trying to
Yeah,
figure out if we could get above that.
right. Exactly.
So that's a great number for this week, just to
Mm-hmm.
say, okay, that the shift has come through and the tide has turned if we get stuck
Mm-hmm.
below there.
Yeah, exactly. And even 62.70 will serve as an early warning, like a yellow flag.
Exactly. Give you a heads up. Hey, be careful with your longs.
Mm-hmm. Yeah. So that's it for the S&P. I know you're going to cover the NASDAQ, so we'll have all that going on in a minute. Oh, let's take a quick look at the Dow futures. Following through, I mean, let me show you guys more of the square. We like this because the squares have been working great. Square 72 works well with Dow. And you can see the 50% level is where we stalled out. And we're back at the same area. Are we ready for a triple high? I mean, maybe. We have a 720 bars from the low in 22. So 720, we got 2 cycles out. So we have timing, right? I mean, in a bigger way, not just the 90 we're talking about here, but we do have timing in a bigger sense. I'm using this because you guys know the timing's the same on all the indices. It's just saves time. I don't have to move the squares around. Anyway, that's what I want to show you. We're even from the 22 low, we're doing pretty well timing wise. So you want to watch that. All right, let's move onto bonds. Not a whole lot of excitement, but guess what happened? The trend line is starting to crack, and we got as close as we can possibly get without tapping it to the 1610, 1609 level. And well, if we were going to go, we could keep going, but we didn't. And that was about 20, 23 days, half the square. I mean, the resistance still holds. It's 16 and a half or so is where the resistance is. And that's a 45 degrees down from the high from September. Yeah, that's pretty much it. So looks like we hit resistance. Now we're looking to see if we can go lower. The trend is pointing to go, towards lows. We'll take a quick look at the weekly to put things in perspective. So you can see the trend is clearly low. We did make the 106.27 area low first, but we're not making higher highs and higher lows, right? We ran up ABCD up right into this 128 level, and now we're drifting lower. So we're between the last low and the last high basis the weekly, which is kind of a tough spot to be because we're inside that swing. And now we got above this 114 level, and looks like we're holding above it. But let's see. 114 is kind of another sort of a bull bear line. And let's see if we can hold above next week. If we don't, and we take out the lows from last week, then obviously we have some kind of reversal here. So keep an eye out for that. Let's say. Let's move on to crude. Not much to say. We're holding the level. 64.75 is a really important level. We ran up. We talked about it last week. We spent some time on it. And long as we're above 61.60, we're in great shape. Being up in here, anywhere up above 64, I think is and we're at 66.50, right? We're ramped up, right? We can easily move higher. And once we broke up here, I think on the second day or so, we talked about, you can trade the long side, just you have to keep an eye on it. There's not enough things to cause all kinds of volatility, but keep an eye on the levels and the direction to, the highest probability direction, right? So that's it for crude. Take a quick look at, here's a big chart. Picture hasn't changed much. We held the lows from last week. So, and we have one of our favorite inside bars. So next week, if we take out the highs from this week, we can expect some kind of a move higher. We take out the lows, probably test the 61 area. So keep that in mind. So not much happening. It was kind of a restful week. Gold, not much to add. My 1 minute speed round on these commodities that aren't doing much consolidating. So we have a triangle working out, and gold's been breaking these to the upside, like wink, wink, right? That's what I would have to say there. Now, the weekly is giving us some good clues. Remember, I put that score of 52 on the S&P chart, right? So we're working this 52 here on the weekly. 32.94 is the level to watch. 4 squares up, and we continue to talk about, being able to hold above these squares. Then the bounce there's always a little bounce in the step, right? It can be to the upside, and we're not exactly stuck below it. So I would treat it like that and watch gold through that lens. Copper, we got to the quarter and we're well above 495, and we're making higher highs and higher lows. Trend seems to be up. We had a good correction after that square at the high in March, and we called out this. We made a higher low. We called it out. We had a correction. Here's a 50%. We said, long as we're holding above that, we should be moving higher. Held above the quarter, moving higher. Held the quarter here on the retest, moving higher. Now long as we can hold above this on any kind of a retest, I think gold can continue to hold. Copper can continue to move in that way. I'll show you guys the copper weekly in a second. Let's just finish the metals. Silver is being very cool. So, power of the square, right? 35.50, we talked about, holding above that. Silver is bullish and that we can move higher, at least to test the ABCD or $38 area that we marked off up here at the 50% of the square. Looks like silver is doing that. And main thing is, the market is holding the key levels from the square. As long as it's doing that, we're okay. Here's 480 on the weekly is the key level, and we're well above that. We had some kind of a little triangle action going, broke to the upside. We're not quite at the highs, challenging highs, but we're not exactly selling off. So it's up in here, and I think all this maybe even military stuff, right? Everything, a lot of this stuff requires copper, so maybe that's why copper's up. Either way, we've been talking about how bullish we're on copper and how it's been capturing all the levels, and well, here we are. Silver weekly. The coolest thing is how, this is another evidence. This is a clear evidence, right? Why we like to use the squares. You can see how we've been holding above the 72. And I know you're going to ask what that level is. It's 35.35. And well, as long as we're above that, we can go higher. And if you look at the channel, $40 is not too far. It's reasonable to expect that we can tap that now that we're above 72. And yeah, that's for silver. I don't know if you're going to cover metals, but if you have anything to add for any of the metals, you can let me know what you think, Ben.
I think your analysis is spot on. They're resting, but they're resting in a bullish manner.
Exactly. And that's the thing to notice, right?
Mm-hmm.
And the thing is, when it's resting like this, if you're watching indicators, they all kind of start to lose momentum. And then you think, oh, maybe it's time to sell it because the momentum's dying, right? But really, if it's holding above the key level and is losing momentum, well, it's just a consolidation, and you want to really not get caught in those things. And this is where this whole concept of holding above or below comes in, right? Above this key level.
Absolutely. It gives you that confidence when everyone else starts getting bored or frustrated.
We move on to the dollar. All right, moving on to the dollar. We've been, I added this square 120 thing because I saw the 120 timing count coming in.
Mm-hmm.
Let me put the full square in. So I had it like this, and we saw the 120 coming in. I wanted to see if we'd get down there, and it quite didn't. But I know the 97. I had that 97 in green, and that's the only solid line that's there, and that's connected partially to this 2022, 21, 22 zone that we were monitoring, because we knew at the time, if we can break above it, then, we're going to go. And which we did eventually in 22, right? So we were really watching that level to catch that next leg. We've been watching the dollar from different places. So, we take the last swing high since we were going lower, trying to see if we can hold these, around par, 99.50, this area, and bounce, which would be, you would have to stall in here. And we kind of, gave it a little battle and just started pushing lower, right? You can see clearly the lower highs and lower lows. And I think I mentioned it last week. Had an ABCD thinking, we're going to terminate there. Obviously, we went lower, and not the cleanest ABCD, but it helps to have some pointers. And so anyway, the square I was using before this, and then I saw this 144 here. So I wanted to look at it in terms of the 72, which is a square that we've been using. And I noticed we're down 100 and, well, no,
Well, that really changed your perspective, doesn't it?
It does. It does.
Putting
And,
that 72 on is really powerful view.
and the timing, so that, I remember trying the 90 here, and you can see we were kind of struggling around there, but then 90 couldn't hold it, right? So then we slipped. And 97 comes from a couple of different places. That area gets pointed from a couple of different places. Anyway, when I put the 72, I noticed, we're down 108, and and it's holding, it held for a few days, got a little bounce. And then you want to kind of look at timing, and more or less from the high before the low, I mean, the high before the move down, we're 104 degrees, right? So that's something, okay, we can call it that. And then if you go to the high, look at that, we're 144 down
Wow.
by
Wow. Wow. Wow.
720, right? So
Nice.
so now we have something bigger to deal with. What happened here is we didn't quite get to the 120 square wasn't quite hitting. So I wanted to just switch back and look at the
That's great.
72. Hmm.
That's
And now
great. I
you
mean,
guys,
if you're
uh-huh.
working with squares, like look at how from the high before the low, look at how it got pulled right down into that
Hmm.
144 in price. I mean,
Yeah.
that's what you like to see how
And
and
time,
that
we're
and
720.
absolutely when it gets pulled into that like that, you say, "Ooh, that's I got to pay attention to that because that increases the chance it's a reversal." It didn't drift into it; it slammed into it.
Exactly. And that's what you want to, that's kind of what you want to see. And we have that from the daily square from the high, right? So high to low, we have that 108. And from the high in 22, which is sort of the high, we're working off of for this entire range. We're 140, and that's where this 97 came from. Now you guys know why I put that there. So, so we have price and time, in the dollar, and I think this is important. We want to watch this very carefully because my thinking along the way is, we squared out here, and that square was enough to get things rolling, but we didn't, right? And where did we turn down? Exactly at the 50% of the square, the upside, right? I mean, 50% coming down. And we had price and time there. But anyway, we turned there, ran across exactly along a one by one down into squaring out. So this was pretty good. And now we have to really monitor this because if this goes, well, I hate to say it, it's not going to be pretty, right? And if you look at the past, this zone we talked about last time, now you know where we got that. It wasn't from this high because we had that from a prior low. But either way, you can see how 144 fell in the same zone as it is from the high, and the 97, which is the middle of this range, happens to be exactly at the 144. You see, I mean, that's just the geometry working and the relationships. So I thought it was kind of a beautiful thing to show you, Ben. This is what I meant when I said, take a look at and I can wait till you see the dollar.
No
And
question about it. And the timing, with the squares, great. You got timing there, but we have other timing that's right in here too, and that's what makes it even
absolutely.
more, you know,
Mhm.
something more to pay attention to.
Exactly. And the sentiment is pretty much in the ballpark because everybody's like, oh my God, the dollar is now again, the dollar's all done and cooked and everything else. So it seems like timing's about right. And we have 180 solar degrees coming off a high right in this period too. So number of things hitting, right? But I just wanted to point that out. We'll continue to watch that, but I'll just put the square back into the high before the low and watch the 50% level. And we know the timing is there. And we'll continue to watch it. But I think it's worth taking shots at the long side if your system sets up in that way. For me, sometimes you can do that. Now, getting back to the weekly, I remember this is the square of the range. And sometimes when you're really range bound, like going through all of this kind of a mess, it's good to have a range to give you a little bit of perspective. And you can see how, above 50%, as soon as we got above 50%, it always run, got above 50% ran, got above 50% ran. Here, right before the drop, we didn't get above 50% and it ran the other way. And what I wanted to, and these trend lines are really important. We broke the trend line here. We came down. So let me delete these, clean up the chart a little bit. And that had to hold. Um, we broke that, broke this one. Now we're holding the last line. Well, we got two, right? So last week I talked about, if we lose this by much, we're going to get down into 95, 50, 96. Looks about like the range based on the square. and some other levels I had measured before. But once I saw that square in the daily chart, then it's time to double check what's happening, because 720 on a trading chart ends up becoming something magical. I'll show you guys this on the square charts. And Ben, you can think about what implications there's going to be if this is really lined up, because I remember this when you said we talked about the 144 in the NASDAQ, in time.
Bingo.
So there you go. I mean, this is about as master as you can get. So plus you see the trend line, right? That intersection. So I think I'm calling this a low. That's, if we do the 1/8 thing and we push a little lower, sure, we might get to 96 area, which is the top of the zone, right? 96 area, and then recover, which dollar could do often. But I think this is just too beautiful to pass up when you get something like that. So especially on a weekly, right? 144 in a weekly chart, or they're closely related. So there you go. We're
It's fun. It's funny. And when I was looking at bonds, I was
mhm,
thinking bonds might be starting to get weak again,
mhm,
and that would be higher rates, which would support a stronger dollar.
exactly. See how it all kind of lines up,
Yep.
you know?
Yep. And it could also point, to a potential topping in the market as well. If a
Right.
weak dollar has been pushing this up, if the dollar reverses,
Hmm.
are NASDAQ and the ES going to be able to, continue to roar higher? I mean, we'll
I,
have
th
to
I, th
see.
I think it's a really good point, but I think also interesting how all of this is kind of wrapping up into the same tiny little 3 or 4 day window, right? After all
Yep.
these days and weeks and months. So
Come on, Barry. Don't you know that the summer months are just boring and everybody's in the Hamptons and nobody serious is trading?
exactly. Well,
Imagine if they made this huge turn while that
mhm.
sort of axiom is still out there and everyone says, "Oh, it doesn't matter. Summer's terrible."
Yeah, well, I think, look, basis the weekly, if you reverse above 98.25, this is sort of confirmed in place, right?
Hmm.
And for me, I'm going off the daily charts, and I think as long as we can hold the daily, we get reversal and we get at least one higher low, I think that would set things in motion.
Very interesting. Really,
Yeah.
really good work. Very, very
Mhm.
good work.
Thanks. And it's time to switch up, right? Sometimes you have to switch up. We're watching the range for a while, but if once the range is starting to slip a little bit, then you have to switch up and go, well, what's happening? Well, what's happening is now I remember why that sometimes I put these lines, they don't all mean the same thing. And I remember what the 97 was there.
And why it's in green.
Why it's in a different color than everything
Right,
else.
right.
So anyway, looks good. Let's move on. Just to look at the euro, which was not making any sense to anybody. So I'm not going to go through. It's a shorter version. So basically, we went to 7/8, which is a really good spot for terminations, and we timing wise, we have the same timing. So there you go. If this uh, high is held, the dollar is also working. Everything's back in sync, and it'll all be okay. Um, Not much to say about the euro other than because we covered the dollar. So if the dollar turns, all this becomes, saves a lot of talking, right? We don't have to really get into slice and dicing the euro. But
Dollar
just to show
turns,
you
the
guys,
euro will be weak if the dollar turns, no
yeah.
question.
So just to show you guys from the low, same thing. It's just mirror. So, here's 144. And I think that looks that looks pretty good. Let's watch it. Let's watch it and see. And for the euro, I think if we get a reversal next week, basis the weekly, that's enough to sort of confirm things. So basis the weekly, right? And we'll roll with it. That's all I got. And let me put it back to you, Ben. Look at the NASDAQ, and especially now that you talked about how all these other connections are there, like between the bonds of the NASDAQ and the dollar. So I think it's starting to take some shape, right?
It's another one of those cases, Barry, where I constantly get awed by how this stuff at the right time comes together.
Mm.
I mean,
Yeah.
the 144s on a weekly basis, they don't happen that often.
No,
By
no.
definition, it's, almost 3 years.
Yeah. Yeah.
And so this to see it all happen on a week when we have unrelated counts and other cycles all coming
Hmm.
to clustering together, it's
It's
awe-inspiring to
pretty
me.
good. And it's time to take notes and then you kind of watch, which is what traders have to do. So
Hmm.
this is one of those note-taking weeks, right?
Yeah,
Move ahead.
absolutely.
All right. Let me put it back to you.
Okay.
Okay. I see you also topped out the chart with the 144 at the top.
Yeah. Yep. High to
Hmm.
high, we're doing a 144 on the
Hmm.
NASDAQ. So
Hmm.
just as a show note here, I'm just going to do the NASDAQ today. Again, it's a holiday show. We don't want to like do a super long video. So I'm going to do the NASDAQ. And I'll tell you a couple things. Corn and soybeans both had false breaks at the low last week. So I'm going to watching those. Sugar kind of did a plunge and closed at the week's high, so there's shifts going on there too. So a lot of things need to be watched this week to see, the effects of these cycles. But we're starting to see the setups in the commodity side. But we won't cover that today. We'll just stick with the Nasdaq. As Barry said, this is the daily, and we've done the key things to note here. We talked about the 90 calendar days from the tariff tantrum low in April. That's right here. We've got 144 degrees from the high, the December 2024 high in the NQs, which again held until just recently, like a couple last week was the first time it made a new high. Unlike some other markets, but it did make, because it was making lower highs, and then we finally did make a new high. So we're 144 high to high from as the low. We said we talked about that 90. The key thing level wise, we got to stay for the bulls to extend this and say, okay, the cycles are an accelerant, not a reversal this time. We got to stay above this 22,800. If we can stay on top of that, then we're going to push higher, and this will be a good cycle, but a cycle which either gives us sideways movement or an acceleration to the upside.
Hmm.
The other point is if we're below 22.8 and we get stuck under here, then we got to watch the stairs going down. Are we taking the stairs, or do we, sort of take the elevator like this, where it's a lot faster? We'll watch the levels. After 22.8, the next level's 22, and after that, it's about 21.4. So daily basis, we have time counts here. The 144 clearly jives with what Barry just showed us in the dollar. So is there a connection there between dollar and Nasdaq? We'll see. But we do have a high to high of 144, which rhymes with the 144 that Barry was showing us just recently in the dollar. So we'll watch it. 22.8 is the key number. If we get stuck below that, then we have to start looking, that this may be a significant high, and start, as Barry said, looking for the lower high to catch the fast move down. So we'll watch it and see how it evolves. Now let's take a look at the weekly. Your weekly here, I was also playing around with it like Barry, and I said, let's see what a 52 does from here. Look how the 52 was catching these lows,
Hmm.
right? I was on the way up. Even this one that did the false break down to the 1/8, it sort of caught it right back up. So here we're kind of in no man's land. The one thing I will say is we've got uh, almost 90 weeks in terms of solar degrees from that low, which was the April low.
Hmm.
So there's 88, almost 90, just like on the daily. Here we've got 30 weeks. High to high would come in the week of July 19th. So there is some additional room in terms of timing if we want to push up and keep going. 23,800, 23,900 would be hitting your full square here. If not, we're going to watch and see if any pullbacks, how we hold at 20,500 area. So here, we're kind of in no man's land, but we are up 7/8. And I know, Barry, you're a big proponent that eighth sometimes fools people because you're waiting for the full square, or
Hmm.
you go beyond it by an eighth and you say, okay, this is a breakout, and then it comes back. So we'll see if the 7/8 stops it, which 7/8 is at 20 23,000, call it
Yeah.
23,038. So we'll watch that and see. The monthly is a really interesting one to look at because I was playing around with the monthly here. Let's look at the monthly.
Hmm.
So I set the monthly here at the dot-com low in 2002,
Hmm.
2002, early 2003. And the thing that jumped out at me here using a square of 60 was how well like 30 months gave really great reactions here. And if you look at the recent history of every 30 months, you got the COVID low in 2020. You got the low in October of 22, and we got the recent low in April, all on this 30-month timing. These lows are all 30 months apart. So I was saying, well, if this sort of cycle holds, the next low would be in around October of 2027 would be a
Hmm.
low. I mean, could that give us, a 2.5 year bear market? It's possible. I mean, that's possible. The things we first have to see, obviously, is price come down and start taking out support and these different levels. But looking at this 30-month cycle, I thought that was pretty fascinating. I know, Barry, you had some thoughts about the 30-month. Maybe you could share that with people as well now.
Well, I just noticed, we can do these 30s low to low to low, like we've done here.
Hmm.
And we can also do them low to high and finish off there. So as much as that's why we're watching this area very carefully, because I think, if we don't take the path lower, then obviously what's left is higher. But it's
Right. So
from
that,
here, but it's from here.
hmm and that high would be, again in September, October of
Hmm.
2027.
Yep, yep. At
So
least we
that's
have some clear timing, right? But on the monthly basis. So we don't have to look at it every day, but it's there.
And if someone says, "Oh, well, it's just the lows," but look at every 30 months, look at
Well,
what happens, right?
2007, the first 60, that's the hit, right?
Yep, right there. And we
Hmm.
went down from there.
And that was a
And
big
then
one, if you remember.
that was
So
pretty big. It was something they called the Great Financial Crisis. Yeah, that was
exactly.
relatively big. So this timing is pretty good.
Yeah,
It
yeah.
gives us a kind of a stake in the ground that we can look around other cycles and price action and say, okay, where's the big picture rolling to from here?
Yeah,
So this
absolutely.
was an interesting thing we wanted to share with you. But that's all I got on the NQs. Anything you want to add? Daily, weekly, monthly?
No, we're good. I think we can I'm ready to wrap it up. I think we got the important thing was in the indices, we talked about that, the timing there, NASDAQ and the other ones, and then it was the dollar. So which is tied to kind of the bonds and the NASDAQ. And so I think that was the important sort of the point this week.
Right. And it kind of looks in a lot of these markets like, sort of the wave went crashing onto the shore,
Hmm.
right? Like because we had really strong price movement into this time frame in multiple markets. And so now we want to see, okay, as the wave goes back out to sea, what's it going to do now?
Yeah.
Are we going to get another is it a double wave and we got another one crashing behind it that's going to accelerate these markets further, if that's a
Hmm.
distinct possibility, or are we going to get a reversal, right? Is the tide going out and is the wave pattern changing? And that's, hopefully what you've gotten out of the show is that you got to really watch price action. You really watch these levels that Barry identified and I identified in the NQs, and the way price reacts to that in the next, 5 to 10 days will give you a really big clue about what the next move is going to be in those markets.
Absolutely. And you know, you can always say, well, it's up and down from this point. It's up and down. You know, anybody can say, well, it's down from here, it's up from here. But the thing is, once you have the correct levels, that makes a huge difference because then we know when it's really important, when it matters, versus just randomly every day thinking it's going to go higher or lower, right? So
Absolutely.
knowing the level helps you keep the balance in your favor. So
Well, everybody enjoy the rest of your 4th of July weekend. We hope you had a good holiday and eyes open this coming week and head on a swivel because we're really in this window that think I and again to use the pun, we think there's going to be fireworks coming out of here. So let's all pay attention. Let's be able to take advantage of it. Volatility is the trader's friend, and it's coming. So have a good weekend, everybody. Great job, Barry, especially on the dollar. That was some really good timing there.
thanks, Ben. Good job. And you guys have a great weekend. We'll catch you on Monday.
Take
See you
care,
later.
everybody.
Bye
Bye.
bye.